Kevin, it is Kerry. It's Wednesday. This is for Wednesday, March 20th. I think what I'll do is, if I have the newsletter, I'll open that initially by default. So, and by default, we'll also cover the markets that we're currently positioned in. So let's start with wheat, the first. Come on now. I've got that Windows 365. No, I'm sorry, Office 365. It's a cloud base. I don't know what you use, but I'm no longer using hard drive base. It's all cloud. It's a subscription. That way everything stays current and I can retrieve stuff, blah, blah, blah. Anyway, here's wheat, 450 and a quarter. That is that short-term formation. Let me jump into the wheat. Boom, boom. That's this one right here, 450 and a quarter. And so closing below at risks, 430. I'm now, I hate to say signals right now. I mean, this is we've kind of settled into this quiet little phase. I could see a scenario where we break 50 and a quarter and we get down to 39 and a half, and then we rally back out. That's certainly possible. So we could discuss that. Ideally, we never even test this tomorrow and we just continue higher. But we could talk about wheat. The scenario I'd hate to see unfold is we stop out at 447 or 443. The market goes to 439 half, maybe settles tomorrow at 40 half or 41, kind of up in, right in here. Gets strong overnight. In other words, this secondary formation winds up holding, and by the end of next week, we're above that 473 and a quarter trend line. So that's what I would hate to see unfold. So I guess I'm questioning whether we just ride this thing back down to that 430 point, whatever that is, 430 and three quarter level, or we are more risk averse. I could be swayed either way, and sometimes this just comes down to temperament, and policy, risk management. Do we? It is better to take a small loss than a big loss, or to not take any gain at all. Did I say small loss? I mean, it's better to take a small gain, obviously, than to not make any gain at all. So blah blah blah. Anyway, let's move on to June live cattle, which we're in now. And as you're well aware, 121.70, that would be the downside pivot point. The settlement below that point would indicate a good weekly high. We should then, this area is essentially now a target. It is the base of this channel formation, which is not properly drawn for the base, but it is the base. And there's something else down there, I think a speed line. So this area is our, basically a 2 to 3 week downside target. And if we close below 121.70, we could get down there by the end of next week. On the other hand, if we close above 123.52, this market maintains a bullish stance through April. I think, what is it, a 1% violation of 123.52 would be 1.25, about 124.77. It would be above the 62 level. 124.77, I think, would be our stop loss tomorrow to give this thing breathing room. Other than that, continued settlements below 123.52. It's just a matter of time before this thing begins to collapse back. So there's that. Let's talk feeder cattle. What do we have here? Live cattle, wheat. Boom. Sorry to put you through this. Just want to make sure I don't repeat myself. Feeder cattle. A lot going on in the livestock, actually. There's nothing really I should skip over at this point in time. Feeder cattle rolled to May today. We settled above this formation at 150 even. So it's now really the start of a range of support down to 149 even, especially once this week is over, and it's assumed that we settle above this long-term speed line. That's not really an earned buy signal, but so what? It is the way it is. And especially that is relatively consistent with this formation. This is a bullish sign. I'm expecting at least a retest of this 155.35 area, and I think more than likely heading all the way up to the 163 half high from 2017. And, this is an old area. This market could stall out for an entire season, for several months. That's why I say, ultimately we could actually see the low 180s on such a buy signal in feeder cattle. And I'll show you that right. Oh, there it is. I actually drew it earlier. So yeah, 163.50, but this is like in the low 182 handle. And I do think if you were being bold, this is what we're looking at up here. You've got kind of this thing going on. So I guess that's not altogether different than 163. It's more like 167. There's this whole area is significant, but and we're talking, the better part of a year potentially where we get up into the low 180s on that feeder cattle. So it's kind of a big long-term move that may be unfolding as we speak. Let me see. Did I talk lean hogs yet? I do not believe so. Let's jump in there. And we closed back below a structure today in the June lean hogs. 86.97, although I saw 87.25 last or something. There's two closes, right? I mean, my CQG is showing 86.97, but my bar chart's showing 87 and a quarter, which is just below that channel top. In any event, we did settle back below it today, and the market is now vulnerable to slipping back in the upper 70s over the next several weeks. The next clear sell signal to downside would be closing below 85.32, which is, by the way, I'll pull that up just so you can see. God damn it, where the hell is it? There we are. Okay, so the low of the high is 85.32, which also roughly coincides with these old highs in the 85.50s, 30s, so forth. So closing back below the low of this high, I think would be an affirming sign that the market is likely to continue collapsing over the next week or two down into the upper 70s. If we close above the high settlement of 87.57, just the opposite, the next week or so should yield at 92.12 level. And you're familiar with that from the weekly chart, long-term ascending channel top. And that's, we can talk about lean hogs if you want to. I have a feeling, though, we're sort of watching this. That's kind of the general theme here. And I don't have a problem with that because lean hogs, they can run thin and they can be directional, and they're certainly in this sort of meteoric, sort of parabolic, straight up, church steeple. Do you want to get in front of that? I don't. Let's talk about. I'll take a look at the spread. Oh, did I? Do we want to talk Aug live cattle? We can. We're above this formation. You know what would be nice is if we weathered whatever storm there is by that 123.50, whatever it is in the June contract, that channel top we sold against today that we settled clearly below. That is somehow, if this market wants to test this 120.37 in the next day, two or three, and we could still weather whatever storm there might be in terms of challenging that channel top and we don't get stopped out, that would be the perfect scenario. We test this channel top, we don't get stopped out of the June, and then this also eases back along with the June contract into later April. But this is our big area right here in this contract. And if we close above it, if we closed above this level today, we've certainly been stopped out, I would think, in the June live cattle. But closing above this and secondarily or primarily in the June contract above that 123 change, that's just bullish broad market for the live cattle. Otherwise, we are in the midst of testing a significant area of resistance, and August has not rallied to its yet. But there it is at 120.37. If we settle back below 117.85, and yesterday's low was 117.75, so that would actually be kind of a sell signal on both counts. That then should yield this sort of 113.45 to 115.02 area within a couple of weeks. Finally, anything less? I thought I'd take a look at the live cattle spread. This is the June AUG. So here we are, a key reversal high here in the spread itself. I don't know if I have any thoughts on the validity of key reversal highs in the spreads themselves, but I don't think we came too far from testing an objective today, and not quite. No. This is what I've been looking at. That's drawn wrong. Let me try it one more time. Come on. All right, that tomorrow's at 5.250. So. But based on yesterday's activity, this could be like a blowout top. This speed line, by the way, is valid at 3.25. I had to redraw it. So this is our next sell signal. And I'm just kind of farting around here while I'm speaking. We've got this here too that's beautifully corresponded to it. So this is a big area for June AUG. But I know you're more interested right now in the where the hell is that? I've got it around here somewhere. April, June. Oh, well, this was some relief for you. We do need to get above this high because this corresponds with this line, 6.675. That would be nice. If you could close above that tomorrow, then we're likely to test this thing. And honestly, I probably would recommend neutralizing your position up in that area, but That would be your call. We came not far from testing this 5.3 target. This was, I think, was that 2 to 3 weeks? 2 to 3 days. Yeah, that's what, geez. Anyway, so we got out of, let's see, ethanol done. RBOB, interesting. We rolled to May today. And lo and behold, we have a channel top that's not been tested yet, that we've been closing in on at 2.9027. And yet, let's go ahead. I got to close out of this chart so I know that I've covered it. RBOB, the 2.9261, I believe it is. Yeah, 9261. This is in close correlation now with this new channel top at 2.9027. So there is more validity than ever that we've got a solid resistance area, even on this daily chart. I mean, this is a channel top that goes back to the December low, so it covers several months of activity. That should be at least a weekly containment point. And you have this former channel bottom. So, if you want to look at puts right now in this market, I can't believe they're all that expensive because the volatility has just been kind of a meandering, I'm up for it. I'm up for buying puts in the RBOB up in this area. Then the next question begs, crude oil. Are we going to be double long eventually, both RBOB and crude oil? This is a topic of worth discussion. And I'll just take a look at crude oil. Right now, here we go, another screwed up channel formation. Thank you, CQG. And that is the 55.25. That is we're away from that. Really what we're looking at right now is the page 2 of crude oil, these formations. Once again, 91.45 to 91.94. And that's up here. And this is not altogether different than the resistance I just showed you in the RBOB at 1.9261. Same exact time horizon, same formations. So I guess the question is, do we do both? Obviously, RBOB would come first, I would think, and then followed a few days later, perhaps by crude. Which do we pursue? Both or just one? Let's see here. Corn May. We got out of that call, I assume, today. Market's higher. I have to redraw this every damn time I come in here. I'm going to shoot a video, actually, for CQG technical support people. I brought this up to them one time, and they didn't have an answer for it. So I just need to keep it in their brain. It's 366.25. Truly, overall, above this, I haven't really been shaken off of this upper 380s target. So, but, today's activity, it looked like we're going to settle below this low, Anyway, we're out of that call, and that's fine. But we're still long the wheat, and I did cover that earlier. Soy meal. Let's take a look at soybeans. We've got this structure here. God damn it. That's that 911. And I don't know if we'll test that tomorrow, but that's our buy signal, That is our buy signal with a settlement above, then expecting 941.25. Until then, we're expecting this lower 880s, 880 even in a couple days. That's what we're looking at the next week or two. And overall, holding below 941.25, we're looking at sort of this consolidation base at 857 even. 857.25. So 911 even, important pivot point. If we close above it, I have no problem being long this market for several weeks up into the 940s. Whether we do that with futures, I don't have a problem with that. There's an E-mini bean, right? Correct me if I'm wrong. I mean, we could look at that as well. Because I guess the question is, I see us having the possibility of having 5 or even 9 different positions, and I think we could actually manage that well with the time and everything that we're doing here. And then, but we need to manage our risk properly. Obviously, it would be nice to stay under a 10% margin equity ratio on the entire portfolio, right? Is that really what we're looking at? And so little micro positions in a variety of markets. That's probably a topic we should probably have, a discussion we should have. So I think that covers all. Oh, let's talk S&P. Once again, I'm glad we didn't get calls. The market settled right in this area It's at 35 and 3/4 tomorrow on the day. On the weekly chart, 34 even. The low of yesterday was 28.29. If we close below it, I think that in itself is a sign of weakness. So once again, I'm glad we didn't buy calls today. Um, you know, when would we? That's the next question. I think a higher settlement above this one at 28.41 and 3/4 from a couple of days ago. We close above that. That looks pretty damn good. Um, and by the way, we have not yet. Let me take a look here. Let me open up the S&P letter. All right. We have not yet settled above the weekly. We're just testing it. This is all intra-week stuff. So, I think maybe what we do in a big picture thing like this is we just wait for Friday. Where are we Friday? And is there a kind of a low cost way to get in on a longer term bull move? And I know we were discussing that today, and it's the conversation worth keeping, I think. Because the truth is, some of our most sustained moves are in the S&P 500. Some of the most sustained moves, as you're well aware, are in the stock market. So there's that. S&P covered. Let's jump into the extra stuff. Yeah, Euro currency. Take a fresh look. A little higher, but once again, this 1594 is our big area. So nothing worth really getting too caught up on that. Let's take a look at the Canadian dollar. Look at that. Holy cow, we tested this area today. And but we didn't close negative. So I'm going to start disregarding this channel because it's kind of insignificant right now. All right. Let me open up a fresh chart just to see, what are we looking at in terms of downside? Yeah. Oh, that's not even drawn correctly. Bear with me here. Come on. There we are. Okay. So there's that. That's really not much. Yeah, we got back above that. So this is for tomorrow, 75.21. This close was 75.17. So yeah, I think if we close below 75.21 tomorrow, after having tested this thing, now if this market sort of creeps back up overnight, just know that tomorrow we've got 75.53 to 75.58. Are there micro e-minis on the Canadian dollar? What is the risk here? I know I could look that up myself. I just thought maybe you knew. Maybe we could talk about this tomorrow. Like I said, after having tested this thing can easily head down to this new channel base now in the 73.80s and dropping. And so we'll go back to this. Yeah, I think this channel structure, you've got these highs, and this is the angle. If settled below 75.21 tomorrow, is sort of a go with, as after having tested this area. Inversely, if we settle above 75.58, that's actually a buy signal. So we've done nothing yet, and we close tomorrow above 75.58. We should be comfortably sitting into a long position that'll last another week, 2 or 3 into the 77 handle. Okay, I'm going to call this a 1 again. Japanese yen. I'm sure there's nothing. That's right. British pound. Come higher. It's near the highs of the week so far. Still a pretty narrow range for the week so far, but nothing new here. Above 28.57. Upward creeper into the 138s. Gold. All right, here we go. Redraw that popsicle. God damn it. Here we are. All right, so tomorrow, this formation is at 1300.6. It's rising like a perfect point every day. 1300.6 is our channel support. We tested the speed line again, so we're still in this sort of head and shoulders development. This time frame is getting very similar. I don't have a cycle stuff. I do here somewhere in this thing, but it's 12 bars or something. We're getting in there. And so closing below 1300.6, bearish. closing above 1317.9 bullish. If you're reluctant to buy this channel formation, I don't have a problem with that. So we either buy a settlement above this or sell a settlement below it. And I guess that's the way to do it, right? We've been testing this channel quite a bit. So the more we test it, the weaker it becomes. So we'll just see. But we can talk about this in the morning if you like. Gold, silver, 20 minutes. Same thing, quiet market here, but you can see the support, 14.963. That is like a 4-star area, can contain selling through April, and above which the upper 16 is in reach, say by the end of April, end of May at the latest. Copper. Copper eased back a little bit today. Same story, though. Platinum, I mean, I didn't show you this yesterday. It's strong right now, but really still nothing to do here. I can take closer looks at this if we get like up into this vicinity. 30-year bond. All right, 30-year ease back. I think the 10-year did as well. Once again, same story. We've got these formations here, but this is our big resistance area. Go on to the 10-year. Okay, let's reacquaint myself with this crap. All right. There's that channel structure that if settled below. We've rallied, as you're well aware, to within 1% of this area. So we are essentially testing it. Yes, 123.13. We've been up to 123.03, certainly in the realm, right? What is a 1%? Oh, wait, I'm thinking 10%. Sorry. 1% of 123. Sorry, no, it'd be 1.25. Yeah. Yeah, right? Yeah, we're well within 1% here. So, yeah, we're well within 1%. Having tested it, this market is now vulnerable to downside trade. And, near term, tomorrow, Wednesday, 122.18. Settlement below is bearish into early April, in my opinion. We've got a bit of a stop here. Stop by that I mean bounce area. But after having tested long-term resistance, this area is certainly in reach within, this is a daily chart, by the way. So a matter of, what, 3 to 5 weeks? Possibly much sooner. And finally, NASDAQ. There's that same structure that we've looked at. You know what? While you're here, if you're willing, it's 22 minutes. I'm going to do a, I don't know how to do it, but if it doesn't take long, I'll continue. I'm going to do a symbol search for heating oil. See what we got. NYMEX E-mini, NYMEX on Globe, NYMEX. Okay. So, oh boy, here we go with the symbology. New York Harbor. All right, so I guess I'm not acquainted with all this stuff. This must be heating oil, right? New York Harbor. Yes, New York Harbor. I don't know what this stuff is. We can talk about this. New York Harbor. I'm going to guess that this is it, right? New York Harbor. HOA. Yes? Okay. This is a weekly, active weekly continuation chart. And, all right, look at, boy, this goes way back here. 2000, this looks a little bit like crude. So I can take a look at this stuff right off the bat. Okay, we're below that as of, this was in November. You have the July low. Take a look at that 2/3 speed line. I don't think was even tested. I'm doing a rough eyeball here. It wasn't even close to being tested. So this is sort of an animal unto itself in terms of it's different from RBOB and crude oil. And obviously you would think as much, you know. We're farting around with this channel formation. You got a huge drop. I'm just looking to see if there's anything, I guess the next good sell would be, roughly speaking, in there. And I don't even know if that's all properly drawn or not. I'd have to redo it. But right now, yeah, I think this extreme channel bottom, 1.8648, is kind of coincides with this old consolidation area. So other than that, I don't see anything. There's nothing jumping off the screen right now that says, this area should be bought. I could do a Fibonacci just to see if it was near that high, which was a 50% pullback. I suppose buying above this Fibonacci 2.0440, the high was 2.0479. That would be the next buy signal. The next sell signal would be a settlement below this structure here. Until then, not much going on. So we can watch heating oil if you like. There's 25.5 minutes, almost 26. I think this is a world record. I'm going to cut it out and send this over to you, and we'll talk in the morning. Thanks.